Ladies and gentlemen, the bullshit is back yet again today. AMC stock falling about 3%. Now, some notable things to point out is AMC is holding that 100-day moving average. Now, there has not been any developments in Courtlandia. What this means is we have not heard anything else from the judge. Besides AMC tried to do a new settlement agreement, we don't know the exact outlines of what was in that, but the judge dismissed it because AMC did not want you to be able to comment on it. So that looks like it's not going to happen. So what this means is it's going to take a little bit more time. Now, expect the situation to be very volatile. As you know, on Monday and really on Friday and after hours, AMC stock went crazy town, hit a high during the trading day of Monday at $6.23 per share. You sold off yesterday 12.5%. You're down 3.3% currently. You've given some of that back. You're still holding some gains here. There is a decent gap from that 430 level that you were sitting at last Friday, really last Thursday, and where you're at right now at about $4.95 per share. Now, from my perspective right here, things are getting very compelling with some of the options, and we're going to talk about that here in this video as well, not to mention everything else you need to know. Today is a massive day as well. As you know, Fed Jerome Powell is coming in hot and heavy, guns a-blazing, ready to stir up the pot like he usually does. So let's go ahead and get into all of this information. If this is your first time to the channel and you live under a rock, well, subscribe to the channel if you want to stay up to date with everything going on with AMC stock as well as the broader markets every single day. So, AMC down a cool 3.22%. Not a huge deal. I think a lot of this is just that reaction to yesterday's sell-off as well as Fed Jerome Powell today. A lot of your small and mid-cap stocks are not doing well. It's very much not an even market yet again today. Now, what you're also seeing is a lot of shorting activity, right? That's pretty clear. And you're still getting the short interest going higher. The live short or the reported short interest, 29.05%. And this just came out yesterday. 150 million shares sold short. Now, on one hand, I mean, just depending on where you think the free float actually is, meaning that if you think, you know, retail investors or apes own 400 million shares, still around 80% of the float, well, that means the free float that's actually sold short is well over 100%. So that shouldn't be such a huge shocker. You're getting the short interest continuing to rise, although AMC did have the strong day on Monday. So the situation's getting even more sprung together. This is kind of like a spring, right? You've really closed the gap recently. You've gotten things, a lot better. Ultimately, you want that to snap and the stock to ultimately rally. And you're seeing more and more pressure being put on AMC stock here today, squeezing that spring a little bit more. Now, if we take a look at some of the option activity currently on the day, same story here. And I find this absolutely shocking, to be quite honest. 36 orders totaling $5.07 million, positive order value of 1% on the day. This really doesn't make a lot of sense. And why does this not make a lot of sense? Well, you're seeing the short interest increasing. Shorts are literally doubling down on their short positions. But you're not seeing any hedging. Still not seeing hedging. What the options in theory are supposed to be used for, the reason why options were created in the first place is to hedge out a position. Imagine it like this. Imagine you have 1,000 shares of Apple heading into Apple's earnings. And Apple has done very well in 2023. So you have a lot of gains. Well, in theory, what options are for is to say, hey, I don't want to sell my Apple stock because I'm invested in this for the long term, but I also don't want to see a lot of my profits go down the drain if Apple has bad earnings. So you could go out, call it a 190 put. That protects 100 shares. You go out and buy 10 of those options. Your 1,000 shares of Apple is protected at $190 per share. So sure, if Apple's trading at 194, you could lose a couple dollars per share down to 190, but those puts are going to protect you under 190. You're going to pay a little bit of premium on that, so your actual break even is going to be around 180. And say if Apple dropped to 160. Well, good thing you got the puts and you're protected, right? Same thing to the upside. Same thing if you are short on shares. For an example, if you're short on AMC stock, 1,000 shares, let's use that as the example again. Well, if you shorted Apple stock, or AMC stock, not too many people short Apple these days. If you shorted 1,000 shares of AMC and call it $5 per share, well, that has unlimited loss potential. AMC could rally to $100 or multi-$100 per share. What you should do, theoretically, is go out to the option chain, go buy yourself 10 calls at $10 per share, or per share, per the strike price, or $6 strike, whatever strike you want that's higher than $5. That would cap your loss. But as long as AMC continued down, you would make money on your short, and your short would be much more than your hedge. That's what options are supposed to be used for. But they're not using them in that way. They're using it as even more leverage to go even more short on AMC, which does not make any logical sense. That should not be happening. Especially after what you've seen Friday and on Monday. These options can also wipe you out when AMC moves to that degree. Now, I think on one hand, it's not necessarily a great thing that AMC needs to raise capital. Apparently, to Adam Aaron and AMC's executives, they could run out of money in 2024 if they don't raise capital. So there is other factors at play, such as that hey, I mean, you could run out of money, right? That's never a good thing. That's never going to be good for the share price of AMC. And that's why my theory of if this conversion went through and AMC raises billions of dollars of capital, even if you get dilution, you probably see a much larger rally. I think that narrative is still intact, as well as if the courts just deny this outright again. I mean, we've seen the reaction from that. The stock went higher. I think if the courts ultimately approve the settlement, AMC goes higher as well. I don't really think there is a losing outcome here for AMC stock, especially when you're getting more of this shorting and shorts just doubling down on these positions day after day after day after day. Let me know what you think about that down below in the comment section, but I really don't think there's a negative outcome here. I think the only outcome is positive for us, and that means AMC stock going higher, especially if the judge did actually let this go through in one form or another. I mean, everyone has the same idea. Once this goes through, once the judge makes her final ruling, if we get another final ruling, just expect some kind of update. So I really shouldn't say if we get a final ruling. We will get another update from the courts. Well, I mean, that should be positive as well. So something I'm kind of looking forward to also, and something that makes me even more bullish. Now, as far as the options, some of those options towards the end of this year, even for 2024, are now a lot cheaper than they were on Monday here today, because the markets, AMC and the markets have really fallen. And they are actually falling right now as we speak, heading into Fed Jerome Powell later in the day today. Fed Jerome Powell is going to be very important, especially for your small and mid-cap stocks that need to raise capital, that need financing, which is a lot of your small and mid-cap companies. And why is the Fed important? Well, the Fed's going to kind of dictate what happens with bond yields. And based off of that, I mean, you could definitely see a move up or down pretty dramatically. Now, let's talk about the cost to borrow fees. A lot of people in the trading group are actually talking about this right now. Cost to borrow fees have dropped a little bit. Now, the easiest thing I could say, and this might not be the right thing to say, is the amount of shares recently has increased. Now, normally cost to borrow fees are dictated on supply and demand. That's kind of a normal, I guess, way to put it. Not always the case for AMC. So I don't really have a great answer to why the cost of borrow fees are now 300% instead of 1,000% like they were yesterday. Cost of borrow fees in the beginning of the trading day today were 1,000%. So I'm not really going to draw any conclusions of the cost of borrow fees have really dropped or not until we get towards really the end of the day, today, tomorrow, and the next day. That's where you get a better picture of where the cost of borrow fees are, actually at. This is one reading from Interactive Brokers. They tend to favor hedge funds and institutions. Maybe they got a little bit more shares that were available to be lent out. Cost of borrow fees dropped a little bit. As you know, cost of borrow fees do kind of rotate, right? They're very volatile. They go up and down. So we just need to watch to see how that goes. I don't think in the grand scope of things, it's a big deal. Still, 200 to 300% cost of borrow fees are out of this world. But keep in mind that these hedge funds have been in their trades for a very long time. We can actually go look at the average days out on loan. Look at the free flow out on loan. Let's go ahead and take all this other stuff off the chart. Out on loan, 179 million shares. Average days out on loan, 138 and a half days. And that's the average. So I don't think it really matters if the cost of borrow fees, go up or down on a 1 day, 2 day basis. What's the trend look like? And the trend for the cost of borrow rates have been out of this world. So I think that puts still a lot of pressure on hedge funds and institutions. And really the, days out on loan has been increasing from around 35 you've seen back here in August of 2022. So it's been upwards ever since then. And right now you're sitting at some of the highest levels that you have seen, literally ever for AMC. I mean, look at this blue line. Let's blow this chart up. You've never been this extended on the average days out on loan. Like, this has never happened before. So everywhere you kind of look, that's the story. The data just looks so good. It's never looked this good before. And I think that is ultimately for a reason, right? These hedge funds, they're not going to learn their lessons. They're going to get squeezed out of their positions. That's how this ultimately ends. The timing on it, what causes it, obviously, we could be right, we could be wrong. We'll probably not know until it happens. Nobody expected. Nobody. Not the Bulls, not the Bears, not people that are neutral expected the courts to deny AMC from doing this settlement, to reverse the status quo order. Nobody expected that to not happen. And it happened, which I think goes to show just expect the unexpected. Now, as far as earnings today and after hours, guys, if you guys want to come trade with us live in real time, link down below in the description of this video. We're going to have big earnings today and after hours from Meta, Chipotle, PTC, ServiceNow, Lam Research, QuantumScape, eBay, Mattel. But really, Meta is going to be a big one. Meta is what we did make trades on today. Meta could move big time. And, that's ultimately going to be a very exciting one. Meta has the potential to really move the markets as well. We obviously seen Google had good earnings. Microsoft had good earnings. They gave you bad guidance. So Microsoft is down like 4% today. And that's also weighing on some of the liquidity out there. Potentially helping to dry it up if Meta has bad earnings. Well, the stock's going to fall quite a bit, and that's also going to affect other, big tech names, and that can have that same liquidity draining effect on our markets as well. Now, if we look at the Stonko tracker data, I think another big story of the rest of this week, as well as the next 2 weeks here, is going to be the option activity. The put side has in the money puts at 144,538. Out the money puts at 328,000. $100,000. In the money calls at $20,000. Out the money calls at $224,000. So there is a decent amount of option activity now on the option chain, but really what moves the stock around is, do you see fresh new options getting bought or sold? That's what moves things around. And especially when there's a lack of option activity, that's where things get more volatile. Like the same 50,000 calls, getting bought for this week is going to have a bigger effect than 50,000 puts being bought. So you definitely want to see how these numbers kind of evolve from here. There's 10 times more calls out the money than in the money. So if you do get a rally towards the end of this week, which I expect to happen, I don't think this is going to be a straight downward move. I think there's going to be a lot of volatility, and you can expect 5 to 10%, green or red days from here until we get more information from the courts. Well, if you start to see some of those calls go into the money, that's going to be very good. If you start to see those puts go out the money as well, that's also going to be a positive for AMC's stock. Now, if you actually look at the technicals here, you're holding that 100-day moving average so far as support. That's positive. That's at $4.88 per share. That's really what you want to watch. But AMC does what it does. It has no rhyme or reason a lot of the time. Why is the stock down 4% today? Well, your guess is as good as mine. My best conclusion is you have Fed Jerome Powell at 2 and 2:30 p.m. today, and yesterday was down 12+%. It's a small continuation move. That's really the best answer I have. There's no company-specific news. There's no reason that you should be more bearish today than you were yesterday or the day before or the week before. And after what we've seen, to be quite honest, Monday and on Friday, the further you drop, the more bullish it actually is, the less risky it is to get into a position. So do it, you guys, please, if you want to wait to see where the stock goes before you initiate some of your bullish positions you maybe wished you had on Friday or Monday. Well, be my guest, but I don't think the stock's going back down all the way to the levels that we were at last week. I just don't think with the news we got and the reaction that we got, the short interest where it is, cost to borrow fees, bearish option activity, that makes a whole lot of sense. But hey, we'll see. I could be wrong. So that's going to do it for this video. Again, Fed Jerome Powell at 2 to 2:30 p.m. today. Press conference will last until about 3:30 p.m. Those are going to be massive catalysts, and we will be here to talk about all of it after the press conference, probably around 5 or 6 p.m. today by the time we actually get a video put out. But that is going to do it for this video. Hit that like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. Again, if you guys want to come trade with us live in real time, link down below in the description of this video as well. You guys enjoy the rest of your day, and I will see you in the next one.